When it comes to planning for the future, one of the most important financial decisions seniors face is choosing the right life insurance contract. A well-structured policy can give peace of mind, protect loved ones, and cover final expenses, but the wrong contract can become a burden with high costs and limited benefits. That's why understanding what to look for in a senior life insurance contract is so crucial. In this video, we're going to break down all the key factors you should consider before signing on the dotted line. By the end, you'll have a clear roadmap for making a smart and informed decision. Let's start with the types of policies available. Seniors typically choose between term life insurance, whole life insurance, and final expense insurance. Term life insurance provides coverage for a fixed period, such as 10 or 20 years. It usually has lower premiums compared to other options, making it attractive for seniors who still have financial obligations like mortgages or dependent care. Whole life insurance, on the other hand, lasts a lifetime as long as premiums are paid. It's more expensive, but it also builds cash value over time and ensures permanent coverage. Finally, there's final expense or burial insurance, designed specifically to cover funeral costs and small debts. These policies usually have smaller coverage amounts, often between $5,000 and $25,000, but they're easier to qualify for and help families avoid financial stress during a difficult time. Once you know the type of policy that suits your needs, the next step is deciding on the right coverage amount. This is where many people either underinsure or overinsure. Too little coverage means your family may still struggle with expenses, while too much coverage can mean unnecessarily high premiums. Think carefully about your priorities. Do you want the policy to simply cover funeral and medical bills? Or do you also want to leave a financial gift for your family or cover outstanding debts? A good rule of thumb is to calculate your expected final expenses and add any other financial obligations you want covered. That will give you a clearer picture of the coverage amount that makes sense. Another major factor to look at is the premium structure. Some policies have level premiums that stay the same throughout the life of the contract, while others may increase over time. For seniors living on a fixed retirement income, stability is key. You don't want to be surprised with skyrocketing premiums 10 years down the road. Look for contracts that guarantee premiums won't rise with age. Also check if there are options for paying off the policy in a set number of years, so you won't have to worry about payments later in life. Health requirements are also a big consideration. Some policies require a medical exam, while others use simplified underwriting with just a few health questions. There are also guaranteed issue policies that accept everyone regardless of health, but these usually come with higher premiums and waiting periods. If you're in reasonably good health, you'll likely save money by choosing a policy that requires a medical exam. If you have health issues, a simplified or guaranteed issue policy may be the best option. Just make sure you understand the trade-offs. Speaking of waiting periods, this is another detail that often catches people off guard. Many guaranteed issue policies have what's called a graded benefit period. That means if the insured person passes away within the first 2 or 3 years, the policy won't pay out the full death benefit. Instead, it may only refund premiums paid plus some interest, unless the death was accidental. Always read the fine print and know exactly when full coverage begins. Cash value and loan options are another area to review. Whole life and some universal life policies build cash value over time. This savings component can be borrowed against if needed, but keep in mind that loans reduce the death benefit if not repaid. If you don't need this feature and are mainly concerned about affordability, you may want to stick with a simpler policy without cash value. On the other hand, if you like the idea of building equity and having access to emergency funds, cash value policies may be worth considering. If you're leaning toward a term policy, check whether it has conversion options, This allows you to convert your term coverage into permanent coverage later on, without having to go through another medical exam. That flexibility can be a huge advantage if your health changes and you want to maintain coverage for life. Another crucial factor is the company itself. A life insurance policy is only as reliable as the insurer behind it. You want a company with strong financial strength ratings from organizations like AM Best, Moody's, or Standard & Poor's. These ratings indicate the company's ability to pay claims, which is the ultimate promise of any insurance contract. Choosing a well-established insurer with a solid reputation will give you greater peace of mind. Affordability and flexibility should also be at the top of your checklist. The best policy is one that fits comfortably within your budget without putting strain on your retirement income. Ask about flexible payment options, whether you can adjust coverage if needed, and what happens if you miss a payment. Some policies allow you to reduce coverage instead of canceling entirely, which can be a useful safety net. Riders and add-ons are another important area to explore. An accelerated death benefit rider allows you to access part of your death benefit early if you're diagnosed with a terminal illness. This can help cover medical or living expenses in your final months. A long-term care rider can help pay for nursing home or in-home care, which is increasingly valuable given rising healthcare costs. Accidental death riders provide an extra payout if death occurs due to an accident. Each rider comes at an additional cost, so weigh the benefits carefully against your needs. At this point, let's put it all together. The ideal senior life insurance contract is one that provides the right type of coverage at the right amount with stable and affordable premiums. It should have clear terms, minimal exclusions, and ideally some flexibility through riders or conversion options. And it should be backed by a reputable company with strong financial stability. Before making your final decision, compare at least 3 to 5 different insurers. Look at the fine print of each policy, ask about waiting periods and exclusions, and don't be afraid to get professional advice from a financial planner or insurance broker. This is not a one-size-fits-all decision, so the best policy for you depends on your health, financial goals, and budget. In conclusion, what to look for in a senior life insurance contract comes down to balancing coverage, cost, and reliability. By carefully considering the type of policy, coverage amount, premium structure, medical requirements, waiting periods, cash value features, conversion options, company reputation, affordability, and available riders, you can choose a contract that truly serves your needs and protects your loved ones. Remember, the goal of life insurance is peace of mind, and with the right contract in place, you can face the future knowing that your family will be taken care of. If you found this guide helpful, be sure to subscribe for more videos that simplify financial decisions and help you plan with confidence. Thank you for watching, and take care.